As you know, what part of our ethos is we want everyone to participate. And we have our host, which is we want to give them special time because they have some special content to share. And I appreciate everyone's time. I literally just got access to Wi-Fi, so I'm in the nick of time, I guess. Our topic today is tech. We're on our way to Silicon Valley, but we're on Wall Street, so we want to compare and contrast. I say and beyond because we have people who are doing, we're all using tech. Everything's AI today. 3 years ago, everything was fintech. But let's, as we do with our events, we start with intros. Because we all want to know who's in the room, and then we'll switch to the content. And then we'll talk about what's scaring and exciting us in the tech world, whether it's AI, nano, semis, we're at war, so it could be dual use and drones and all the rest.
We have Nick until 1.
Sorry?
We have Nick until
Okay,
1.
we'll do a quick set of intros. So with time, what we want to do is just very briefly, your name, your firm, not what you do. Your name, your firm, and we'll say the city you were born in, live in, and I want to ask, but maybe I'll ask where you want to go tonight if we give you a magic carpet ride, but I'm not going to ask you about that city. We don't have time to go into why you're choosing Bora Bora. Although Bora Bora is pretty good.
Yeah.
Eddie. So with that said, it's easier to start with people on Zoom. So I'm going to ask you, just come on camera and speak. Name, company, born, live, and tonight. Walter, you're on my screen. Go.
Walter Rickey, Greenwich, Connecticut. Matrix 2. We have the solution to.
No sentences. Sorry, Walter. Just your firm.
Okay, that's it.
No, where you want to go tonight? Home.
To Paris.
Perfect. So Ben, San Francisco, Tenacity.
Ben Narrison, Tenacity Venture Capital, born Florida, live Bay Area. You told me last time I'm not allowed to say home, which is always my default for where I want to go. So I'll go to Paradise Island off of Fiji.
And I'm gonna change it because we only have our. Actually, why don't we just introduce him? Because I want to. We might have to do these intros without the last question. So let me just go. So Andrew, I'm just going to keep on going, just real quick. Just what name, company, born, and live.
Hi, everybody. Name's Andrew. Last name is Gould. I'm with Alliant. Born in Boston. Live in Northport, Long Island.
Alan.
Alan Alden, Gun Family Office. Born in Kansas City. Live in Mill Valley, California, Bay Area.
Charles.
Charles Beiruthi, former Prime, born in Odessa, Ukraine, live in Cambridge, Massachusetts.
Catherine.
Catherine Chen, Radiate Ventures. Actually, last 10 years in Bay Area, now live in Florida. And so the opposite of Ben here. And then now I'm in San Francisco.
Perfect. Doreen.
Me?
You.
Yeah, hi.
Yep.
Doreen Watson, founder of Arbitrage Technologies. I'm born in Amsterdam in the Netherlands, lived in San Francisco, and now live in the Litchfield Hills, Connecticut.
Great. Lekker. That's what I know.
Liquor.
Not liquor.
No.
Lekker.
Liquor could be
Sarah.
liquor too.
True. It could be. Sarah.
Hi, my name is Sarah Macedo. I'm currently an independent advisor. I was born in Caracas in Venezuela, and I live in London.
Darren.
Hello, I'm Zerrin Aktuna. My company Geneva Geo Consulting. I was born in Istanbul, currently in Zurich, and I would like to go to Paris to join a couple of friends.
Don't add that third question, that third city. We don't have time. Thank you. Tirto.
Tirto, Samudra Pacific, born in Semarang, Indonesia, live in Palo Alto.
Excellent. Carolina.
Hi there, my name is Carolina, representing VC fund Starbeam Capital, born in Warsaw, Poland, lives in London, UK.
Excellent. Blue.
My name is Blue Blakesley, and I work with Save the Children. I'm originally from Hawaii, and I currently reside on the West Coast in Oregon.
Miguel.
Michał Majerczak, founder Acteware, born in Nowy Targ, Poland, calling in from Walnut Creek, Bay Area.
Excellent. Benjamin.
Hi, everyone. My name is Benjamin Sklar from Houston, Texas, live in New York. I'm an equity capital markets lawyer at Sakensia Ross.
Nisa.
Hi, everyone. Nisa Amoyles, A100X Ventures, New York and Palm Beach.
Excellent. Mike Taylor Marin. Sanjeev.
Aloha, everyone. I'm Marin Ryan Sorath. I am a single family office and founder of Lightspace and the Peace Train. I was born in Los Angeles and I live in New York, Tulum, and North Carolina in the Blue Ridge Mountains. So happy to be here. Thank you. And I'll be with you soon in person. Yay.
Hi there. My name is Sanjeev Rao. I live in Manhattan Beach, California. Born in India, Bangalore. And what was the last question? What am I supposed to say?
Just who are you with? But you're an investor and you also work with 361 and doing deals. Adam, you're on. You're here. So Robin, one more.
Thank you. I'm Robin Fink. My company's Taku Partners, and I was born in New York City, and I live in San Francisco.
And Byron. Mike Daly, you're on. Quick, go for it.
Mike Daly, born in New York, live in Silicon Valley, multifamily office advisory.
And
Hey,
Byron, I
Mark.
see you back on.
Yeah, sorry about that. Byron Ellsberg, Prefix Capital, born in small town, Wisconsin, Silicon Valley.
Beautiful. I think we're going to do the table later. Let's take advantage of our host and the content.
Thank you. I'm Adam Ostreich. On behalf of Stifel, myself, my partner, Cecile Completa. Thank you for coming, and been trying to do some work with Mark for a while. Love this community, great people, great network, both domestic and international. And when Mark and I were talking last week, he mentioned that obviously you guys head off Silicon Valley. He said, what are you working on? I've sent him a whole bunch of our stuff in AI, and he thought if we could get together, talk about AI in the world and how we view it and approach it and look at it. I said, great. So I did reach out to my CIO office and have Nick Eftemoff with us today. And Nick was kind enough. He spent the past 3 days in Vegas with myself, with the firm, talking with advisors, outside money managers, or strategists, and everyone else. And it was a very good meeting. So we learned more there. But a little bit about Nick, and I'll hand it off to him because he has a short window for us. He's been with Stifel for about 10 years. He's head of our investment management and guidance within our CIO office. He has 8 professionals who work with him, both the macroeconomic and market analysis. He also leads the management of Stifel's discretionary portfolios, which we call Stifel Choice, which is ETFs, mutual funds, and stocks. They run about $11 billion. And prior to that, he was with Morgan Stanley and he's a CFA, and I'll let you kick off from there. And attached, and you have online, I believe, copies of the AI Revolution, Transforming Industries and Investments, and also the investment strategies, caution or optimism, can AI counter potential economic slowdown? If you don't have copies of them, let Mark know and I'll get you copies sent electronically.
And I would just add one thing, a classic 361 question is what scares and excites. So as you talk about it, what you're talking to your clients, family offices or otherwise, like what is scaring and exciting you if you could address that along the way?
Yeah, sure. And just to, I guess, continue with this, so born in Steep, Macedonia.
Oh, yes, let's do that, yes.
Currently live in Livingston, New Jersey.
I'm in Short Hills.
Okay, all right. So we're not gonna go through this deck. We've been, obviously it's been a timely topic. We've been talking about AI a lot. Maybe I'll start just on page 4 of this deck, the investment strategy brief, give you our way of sort of looking at the longer term, and then if you have any of these things you want to dive into, we can. But like I think like many others, right, we try to identify these higher level drivers of change that are happening. We've condensed this into 5 mega themes that we think are going to be with us. They're all interconnected. We think of these as a lifetime span of at least the next 10 to 15 years, a lot of them much longer. The 4th industrial revolution, I think, is one where AI will sit in, but it bleeds into all of these others. And it's this blurring of the physical, digital, biological world. So we have 4 sub-themes for each of these mega trends. And within this, you can think of data is what AI lives on. The LLMs, they're all built on that. But you need the enhanced computing to power a lot of these LLMs to train. So the data centers, the energy with it. And then ultimately, this is going to benefit the workforce optimization. And actually, as we've refined this, we've changed the future to transportation to just a level higher to now be smart cities, one of which will involve the future of transportation. But within this, we're seeing, and honestly, over the last 10 years, separate to this, we've developed a geopolitical dashboard. Obviously, even this week with I'd say the more symbolic tariffs on China. We don't really import in the U.S. any EVs from China, but there's this growing protectionism and securing of strategic resources. So as an example, last week, I think, or the week before, there was a bill passed on uranium, securing that. So we're looking at it, one, from the food and water security aspect, the growing population, and obviously COVID brought some of this to light, securing vaccines or medicine to protect everyone's own local population. The net zero transition, I'd say this is a topic of debate. Of all these themes that we have on here and sub-themes, net zero transition and renewable energy, I'd say, is where a lot of our clients want to drill down and say some agree with it, some don't. And for us, we're looking at it more from the investment opportunity. EVs, just to stick on that as an example, I think there's been a lot of hype around that. And what you've seen even with the automakers, they've all scaled down their projections of where they think EVs are going to get to. So for example, within our portfolios, we own some of the larger manufacturers like Toyota, Mercedes. They've all scaled back to now be less than 50% target for EVs by the end of the decade or even 2035. And what we're seeing is more of a hybrid move, and it comes down to one, maybe the Western countries can get in and put the money behind it, but when you think about it from a world perspective, we don't have yet the resources or infrastructure ready or the power grid to support that transition. And that's also the pain point that comes to this net zero transition. They're all lofty goals and expectations, but for example, even in New Jersey, the fact of getting to 100% EV sales by 2035, we as a state are not ready for that in the next 10 years. Shifting demographics, this is a focus on from a few different angles. One, with AI and advances in healthcare longevity. So if you think about the over 85 population, that's gonna quadruple over the next few decades. At the same time, you have the millennials that have surpassed now the baby boomers in terms of being the largest population or generation in the world. So they all have different needs, right? The millennials are at the start of household formation. So that's spending on housing, childcare, et cetera. And then at the same time, the wealth transfer that we expect to happen over the next 10 to 15 years and how that's going to feed into investments. The new consumer, this is, again, the change in consumer preferences, a lot of it powered by this tech native younger generation, but also the advancements in AI, the grab and go stores, the personalized aspect of shopping, especially augmented by AI. And then lastly, we like to think a little bit more optimistically as well. Like, none of these trends are linear. So you go through time, let's say, for example, globalization. One can debate, are we still in the period of globalization? Obviously, there's a lot of talk to localization or a more like multipolar world where you have China and the US competing. So we think ultimately, rivalry and competition drives innovation. But we do acknowledge that also there are some negative or headwinds to this, like the new Cold War that we believe we're currently in and will likely be for decades. We're locked in competition with China. But ultimately, we believe that this is going to transform business models and lead to investment opportunities. We take a look at one for our client base and investors. How can we capitalize on this to create opportunities? So our report, for if you want, we can send you a digital copy of this file. It's titled "From Vision to Value: Creating Long-Term Value for Our Clients." So that's a little bit of an overview on this, and I can get into any one of these themes, or if you want to focus just solely on AI and how we invest around it, we can get into that.
Questions, comments?
Okay. So then maybe in terms of AI, obviously, we've been invested in positioning this with NVIDIA and a lot of the semiconductors. We had an article a few years ago called "Semiconductors is the New Oil," right? In the world that we live in, that's sort of the lifeblood.
Back up when you say we invest. Who is we?
So our CIO office makes available a set of portfolios called Stifel Choice that we make available on a discretionary basis. We have ETFs, mutual funds, and then we have 6 stock portfolios, one of which is a large cap growth strategy called thematic growth that essentially invests against these themes. So we have, as part of our process, we evaluate a stock and we say, well, what's the alignment of this stock with one of those themes as one of the 6 criteria we look at.
And what's the AUM of that you're?
So the AUM of the total offering is 11 billion. The equity strategies themselves are 4 billion.
And there's also the AI index you guys created too.
Yeah, so there's from our institutional group, there's a Stifel AI index. It essentially takes our sell-side research organizations coverage and have created an AI index across the spectrum of AI. And then we use that essentially as one of our inputs into our process.
And does this include alternatives?
The AI index does not, but we do have.
Not the index, but just your CIO office. Are you investing in alternatives as well?
We are not. That's handled by essentially a branch of our department, which is the alternative investments desk.
Different silo, same firm, but we have alternatives only mutual funds, and we have a variety of alternative only private equity, hedge funds, and other situations. Sometimes private capital market stuff too. It just depends on which avenue you want to take. Nick and his team are all public liquid mutual funds, ETFs, single stocks. The alternatives is just because of different paper requirements, they have that also.
Got it. Can I ask another?
Yeah.
How do you see the IPO market in the next 12, 18 months?
Still remaining challenged, but definitely an improvement from what we saw last year. Even our firm, they've been active and are projecting for an increase compared to last year.
What was last year?
Anemic.
I know at our Vegas conference we had, our CEO likes to, he calls them the upchart. So when you look at Stifel as a firm, I think 20-something years of consecutive record revenue growth in the wealth side, profits, and I think he made a joke that last year the firm's net income matched the revenue of the institutional side. So it was, I think, $1 billion and change. Yeah.
We did a lead left transaction last week, and it's one of the early ones out the door. Usually last year, Kava came out and all that. It's been very customized and what's the right word? Managed in terms of what comes out when, because people don't want to start throwing stuff out the door and destabilizing the market. So most things that are coming out now are very good quality, well niched, well supported, and the valuations are actually pretty reasonable coming out right now versus coming back a few years. So it is coming out now. There's a lot of other ways people finding liquidity instead of the IPO market. A lot of as you say, in real estate, lend and extend or pretend to extend. On the private equity side and the VC side, there's a lot of secondary players that come in either buying stock and assets from the companies themselves or buying LPs and GP interests also. So there's a lot of companies teed up to go public. It's just a question when the market's stabilized and ready. There's stuff lined up across the board because a lot of funds are dying to not liquidate, but provide liquidity to their shareholders so they can launch add-on funds and all that. So there's like we know, there's a lot of supply coming. Demand is there, but it's not an open season. So I think it depends on what we do. But going forward, next 6 months, we actually expect the market to kind of have some pullbacks. I think we said the next 500 points is down, according to Barry Bannister, our strategist. So, but even within that, people are saying there's still a lot of niches, sectors, subsectors, that there's a lot of value there and a lot of opportunity that people are looking for. So there'll be more deals coming as long as they stay, you know, above par and, you know, well received. I think there'll be more out there. It's just a question of, can the market handle the supply that's coming?
Speaking of supply, Ben, can I ask you to weigh in? You're at the early end from seed investing in Silicon Valley. You've got lots of, I'll call them babies that are growing up. How are those babies viewing the IPO market?
Well, no,
Valuations today?
I've been doing seed investing for 17 years. Just to give you a perspective, I've funded 168 companies. 5 have gotten public. You know, I guess my biggest outcomes, interestingly though, my single biggest outcome was the largest tech IPO of the decade at the time, but I have IPOs that I'm underwater in right now. In fairness, they were SPACs or direct listings. But I think in general, what you're seeing is that Reddit and one or two others have given people hope that there's a warming and an opening. But I think for the most part, everybody thinks it's a next year thing. And more importantly, it's not about the babies. It's not about the folks I've seeded in the last 2 years. It's about the people I seeded 10, 15 years ago, because there is such a congestion, such a just absolute constipation of exceptionally high quality companies that when the window opens, there's a flood of exceptional stuff. You know, you've got a debate going on right now where, you know, one person's out there positing you have to have $1 billion of revenue to go public. Another person thinks it's 500 million. But net, there's plenty of companies that are there. So you've got companies with phenomenal growth, great margin. You look at the trailing, every week I look at the top SaaS companies and their public valuations and what's happening right now. Look, the public markets are fueled by growth and margin. 10% and below growers trade at 4.5x revenue. 40% and above growers trade at 14.5x revenue. So when you find a company that's in the hundreds of millions of dollars, still trading, still growing 40% plus, those are phenomenal IPO candidates, and the market seems to be open to absorbing them. But you know, it takes a while. There are obviously confidential filings in the past. I think it's a next year thing for the most part. You'll see a trickle this year.
Okay. Anyone else?
Quick question. Hey, Ben, on with the, not the IPO market, but what about M&A? Because companies have been really, you know, pushing for free cash flow in, you know,
M&A is a
stocks.
disaster. I haven't seen liquidity in 2 years. I've had one M&A event. Look, I said 168 companies, 5 got public. I probably had 25, acquisitions. The thing is that, you know, M&A is generally driven by a strong IPO market, right? Because people buy when they're worried the competitor is going to go public and they don't want them to. Sometimes they buy after they go public. MuleSoft, I was at 2 different funds that were MuleSoft, got bought, never having made a penny of profit post IPO. So I am not seeing a lot of M&A transaction at all. I'm not even seeing talent acquisitions, although generally speaking, talent acquisitions have disappeared. I think you will likely see talent acquisitions and consolidation and M&A in the general generative AI space. But, you know, nobody's motivated. Nobody seems to care. Now, I am on the board or have been on the board of a company where we are considering, as a well-funded startup, doing M&A to expand our TAM because people are desperate for cash. Right? Like the number of late stage, call it Series D plus companies. I think it's like 382 companies that raised a butt ton of money before, but are probably on fumes that haven't raised yet. A lot of founders are like just holding on by the skin of their teeth. And at some point, you know, the buyers aren't stupid. They know that those folks, when you see transactions, they're not pretty. When you see this constantly. You see this in late stage fundings and M&A.
Let's switch back to Stifel because we're going to lose you in 5 minutes, I think, right?
I mean, I have till 1:15. I just got to get to JPM for meeting at 1:30. So.
Okay. Well, you guys have a view of the M&A market. How do you? Maybe this less you than. Just how do you see this discussion?
I mean, I'd say so. From what we do on the wealth side, we see it when we look at stocks. We haven't been seeing a lot of major acquisitions. I think, you know, and we have in this deck, for example, this higher for longer and the amount that there is, we're seeing opportunistic tuck-ins that companies are doing. But I think to what Ben was saying, we haven't been seeing a lot of activity there for the last couple of years.
I think the one place we probably will see it, we've had a push of late on small caps. Because right now the entire small cap market is Microsoft. That's it. It's 4% of the total market cap, everything is small caps. It's small caps tend to underperform in higher environments. People were with the debt refinancing, because I think some number of that. The highest number of floating rate debt is in the small cap market. So there's a lot of concerns there. At the same point in time, we had a manager last week, and we talked about it. They had 10 acquisitions out of their 115 name portfolio, and they said some of their names are net cash positive. He's like, they're ignored. No one cares. It's, it's hard to get liquidity if you're a larger fund. They don't bother. And the market cap creep has really kind of run up. And the Wilshire 5000, something like 3,600 stocks and change. So he says if things don't improve, there'll be a lot more companies buying down market because it'd be easier, it'd be cheaper, established companies, and they'll see more M&A that way.
So to Ben's point about everyone's looking for cash, you're sitting next to Sarah, who's playing in this interesting playground she's from San Francisco, she's in town, but she's in the secondaries, but like this distress opportunity, yes.
So we're buying GP and LP interest in distressed assets. So either defaults or, situations where LPs need liquidity, but they're either behind on capital calls or whatever, and that's just become a monstrous problem. So people, in terms of liquidity, and also, I think we're seeing, Series A, B companies getting swallowed up for just nothing because that's like where the really strong pain point is in the market right now, that those people have pulled back. So A and beyond, we're seeing like a lot of sort of micro acquisitions of distressed companies that have good assets or, good assets, bad managers, I don't know, or bad, like bad market, but
Capital stack issues, yeah.
yeah. And I think, it's funny because there were so many people that got into early stage. Like early stage was just, everyone wanted, $100 million pre-seed fund, but the time horizon on that is 15 years. And 2 years in, they're like, wait, where's our liquidity? And they didn't really plan for that because IPOs were so strong. I just checked the numbers because I had done this a while ago and I just wanted to make sure. But 2 years ago, there was almost 1,500. And last year, there was 154. So, 2 years ago when people were investing pre-seed, they thought for sure, like 2 years we'll be out of this, everything's acquisition or IPO, and now it's dead. So that's, in terms
A lot
of
of wisdom in
constraint,
there.
and I think this year's gonna be smaller.
This is Andrew. I got a quick question for you. Do you find that many of these companies that are distressed, do you find that many of them have significant IP?
Depends on the space or sector.
Well, take for example, Simon Vine is an individual family office investor who has evolved. We all evolve. He was putting money into all assets. He was doing early venture. Then he finds that these IP-rich companies of frothy valuations can't raise more money, and they become turnaround opportunities at single-digit valuations, sitting on IP. But who could pick them up? This is a little different than your world at Stifel. Who could pick them up? Venture funds can't pick them up because they can't explain that to their LP base. Sort of as a big opportunity for family offices if you're ready to do turnarounds with that IP, even revenue base.
Hey, Mark.
Although you should probably just
Can I comment on
invest in Tiny, which is the public company that's doing exactly that. That concept of finding, for the last 10 years at least, if not 15, I've heard, oh, there are these companies with all this venture money. They built this great tech. I think I should buy them for tiny little prices. Very, very, very hard to do. There's sort of a sweet spot, and Tiny's taking advantage of it, it appears, where the companies have gotten to single-digit millions of revenue. If they had a better infrastructure, they'd probably be profitable, and rolling those up. There's a bunch of people that have tried that. They've almost all failed. Tiny appears to be succeeding. But there was also another great point, by the way, on the fact that there's so little liquidity. This is affecting funds and this is affecting LPs. And so some LPs and clearly the secondary market is on fire. The discounts on primary shares is crazy high, but the LP stakes, where basically somebody, in addition to there being too many funds, people took positions in too many funds. They weren't picky enough. And so now they're sort of selling their lesser funds to be able to support their strong funds. Because if you pass on your Sequoia fund opportunity once, you're never getting back in. And that's probably a huge mistake. So secondaries are definitely a pretty exciting place to be right now.
Is Tiny based in the Valley?
I don't know where Tiny's based, actually. They're public. I just found out about them recently because it's the only time I've ever seen that model work. But they're willing to buy stuff for anywhere from like $200 to $500 million, I think. And they've been doing it over time. They have a very, in theory, like trying to apply a Buffett-like mindset to tech. The challenge in doing that, though, and I would tell you that to try to do it directly as a family office is a little quixotic. Here's the challenge. So when I moved to Silicon Valley, I tried to buy a company from a VC. The company had $8 million on the books, and he's like, what are you going to pay me? I said, well, I'm going to give you back the $8 million because this CEO doesn't know what he's doing. It's a terrible business. He doesn't understand it. What you need to do is X, Y, and Z. He's like, oh, I need enterprise value. I'm like, there's no enterprise value here. The company is losing money. It's not going to do well unless I change it. He said no to me. He then took my playbook and executed it, and they sold that company for $1 billion because it ended up working. They did fire the CEO that was doing it the wrong way. So hope springs eternal. A VC that sells off a business has to take the hit. There are plenty of VCs, like I take the hit the minute I think it's even a possibility, but there are a lot of VCs that will carry stuff on their books at cost. And they are not motivated to take the hit if there is any chance at all that there could be some magic thing that happens. And sometimes magic things do happen. So they'd rather just carry it. Very, very hard to get done, unless it's in a runoff fund. If you're finding things that are long in the tooth that are in a runoff fund, they don't care anymore.
Ben, let's pull. I agree with all this. Is great discussion. Just before we lose you, maybe we go back to the helicoptering, the macro. What scares the most? I mean, we're at war. Yeah, we're at wars. What scares and excites you today? I mean, some of these themes excite you, but what scares you?
I'd say from a client perspective in the meetings that we do, and we could do, go into like almost like a banquet hall, 100 clients, and you could divide the room on AI in terms of, I'm really scared AI is gonna, lead to a lot of bad. And then you have those that are very excited about the potential. I think with all new technology and things like that, it's gonna be somewhere in the middle. And I think even like Barry Bannister talked about, for example, there's a lot of excitement about AI, let's say in the healthcare space. But when you think about the regulation that comes, let's say AI being able to read an X-ray and the sort of, I guess, the legality of that and who's at fault, that's misinterpreted. So we think AI is being something that can help improve productivity, but not replace the human touch or the human element. Or, when someone says, yeah, we're going to move to a 3-day work week because of AI. No, you'll be able to do, I think, 2 weeks of work in 1 week and still work five days a week.
By the way, we're going to Stanford's, they call it the Human-Centric AI Institute. To re-emphasize, I guess that.
Yeah. And then
AI, okay.
AI, and I'd say, I think this sort of push on the net zero transition and renewable energy. I think that's a little bit scary in terms of, one, when you think about the government deficit and the continued spend on that, and what was still needed to spend on to build out to truly get it, if we're going to follow the Paris Climate Accord to 2050 net zero, that's trillions of dollars. And that is headed for what we're calling a fiscal transition, where there's going to be a reckoning. So we think that it's sort of a pushing a can down the road. And I think when we looked at the consensus view for this year across the street, we were pretty muted and still are. We think, our bull case, so we like to think of the, bear bull base case. Our bull case this year wasn't something we're rooting for, because we think, this sort of the consumer continuing to spend beyond their means, the government continuing to spend, rates are going to be higher. That's going to just push to something more like a 2008 potential crisis, let's say 5 years from now or 10 years from now. And then this.
So basically, the AI rifts and climate tech reckoning.
Yes. Yeah, and I'd say, geopolitical, we have a whole dashboard in here. So you see, page 12, we identify, I think it's 13 risk where it's being driven by deglobalization and multipolarity. So we think the US and China are fighting stealth wars, vying for influence across, and at any point in time, even, when you see on 13, Iran and how China has been funding them and that escalating into a regional conflict. That's it's still a fat tail risk. We do think geopolitics are, that sort of potential World War III is still a possibility. Risk that's been coming up a lot from our clients, and we will acknowledge, a lot of it is media driven and the media hype. But again, these are sort of the things that our clients are asking us about. We've assigned the likelihood and what we think is the market.
What do people think about those three factors?
Mark, just a quick question here. So we
Yep.
were talking, I think I heard about government spend. Obviously, government's been going quite heavily on, from the Department of Defense, the CHIPS Act, some of these other areas. Where else do we see non-dilutive capital coming in from the government or investment coming in from the government on a strategic level?
It's people I spoke to, you highlighted very well. It's defense, green tech, natural resources is another very big for them, because right now, if you look into the supply chain of lithium, like neomagnets and all that, of what it takes to kind of guide our missiles and all that, most of that stuff is actually either mined, treated, or manufactured outside the US.
China specifically.
Exactly.
Yeah.
China specifically has like 85% natural resources around it, of the heart of the rare earths and all that. So it usually takes about 18 years from filing to like shovel for a mine, which is insane, and that's too long now. So I'm spending a lot of money now to try and figure out ways to kind of incentivize that here, while working around some environmental impact, which can hold up mines. We had a company in here like a year ago, and they have an entire part of a mine that's not being used because there's 6 plants there that they can't even recreate in a greenhouse. So that's probably like $500 million they can't touch because those 6 plants are there. So meanwhile, China will blow that up in a heartbeat without thinking twice. So again, it goes back to the regulations and all that, how we see it. But a lot of it is military, tech, natural resource driven. That's making a big difference.
I think that I told you DARPA, I had the call yesterday with DARPA. I think they're trying to act as a catalyst to be an LP in certain funds now, to catalyze more capital. They're doing some innovative, I felt like, I was telling this to Rich Sobel, felt like this was like, they're on a wartime mentality right now. I was at the high level, like this was like, let's go do this. Can you make this happen?
As they
Can you
should
help
be.
create $100 million fund? Can you create $100 million fund to provide debt to the companies that you're investing into? If you can, come to DC tomorrow.
We had a meeting with them too. One of their major
I'd like to.
risks is security and cybersecurity right now. That's probably their biggest emphasis out of that programming. So like if you were to add one, it would be, and Stephanie said we were at a DARPA roundtable. She's like, we're just afraid our drones and our planes are going to start falling out of the sky. And so, if you think about the move to autonomous warfare, like the only risk if you have no warfighter is that your equipment gets hijacked. And so everything is sort of IoT and cyber related, and the wars are now, economic and social, and it's all data. So I think that's their biggest emphasis probably out of that bucket, other than munitions advancements. There is probably cyber.
It's a really great observation that you just pointed out, because just going back to Andrew's question, what it really points out is that the value of the IP and the value of the technology has to be paired up with how strategically viable and relevant it is to the absolute needs of today, right? So in other words, if the IP is, you could have it on the shelf, but if it doesn't have a pairing for an actual strategic value, it's going to sit exactly where it is.
I know a lot of people that have moved to DC. Steve Burke likes to say, follow the money. And that's where the money is. Other comments, questions on these themes?
Nick, we've got 4 minutes
Yeah,
for you.
well, I'd say on cybersecurity, that's one of the things we're really excited about. We've been adding a lot of stocks because that market is still very, very new. I mean, when you look at projections, even McKinsey, I think they're projecting a tenfold increase to $2 trillion in terms of TAM by the end of the decade. And you look at Microsoft's revenue today, that's basically, the cybersecurity revenue is greater than, if you take the top 10 players after Microsoft combined. And you think about,
What do you
the
think of
risks-
Microsoft today?
I'm sorry?
What do you think of Microsoft today?
I think in AI overall, this is one of the aspects our view is that the larger players will be the first to benefit. They have all the data, right? Microsoft. So we're buyers of it, and when you look at the valuation today compared to some of these other names, it's attractive as it's been.
What do you think of Apple today?
I'm waiting for their AI event on their strategy. I mean, obviously they've been in the news, sort of moving away from the car, which we think it was good, but I think they're gonna come out with an AI strategy that will impress us, and we've been buyers of Apple as well.
Siri's doing it.
Just a quick note on.
Wait, 1 second, Byron.
Yeah, go ahead.
1 second, Byron wants to say a word. Go ahead, Byron.
Yeah, just really quick on the M&A and the cybersecurity theme. We've seen cybersecurity M&A is definitely an outlier. That's heated up. Like Wiz just raised $1 billion, and it was announced purely to do inorganic growth, or most of it will be. So there's a lot of busy corp dev folks in the cybersecurity world. There's a lot of M&A activity happening there, primarily due to platformization. And just the consolidation phase that's happening from all the supply out in the market right now.
Byron, can you just share what you've helped set up at Stanford, the insights we're about to have next week?
Yeah, I just worked with Sanjeev. Sanjeev's got a great day plan, but they're going to be in the Paul Allen building, going to be going through where Hewlett Packard did some of the early work in the labs, going through state-of-the-art nanotechnology and semiconductor, purely around 3D monolithic solutions for semiconductor, from Dr. Jay Praveen, who's a founder of one of my portfolio companies. Sanjeev's got a great lineup with AI as well prior to that. And then at the end of the day, I have Dan Armbruster coming on, who's he's a board member with me. He's part of the CHIPS Act committee, works with the White House. He's going to give kind of a state of affairs on where that is in terms of press headlines versus the reality of that capital being distributed and where it's going. Some of the challenges they're working through. So it'll be kind of a turn your phones off. I'll talk to you about it. So it should be a pretty interesting session.
Byron, you're being modest.
I have your voice.
Sanjeev's the man.
Actually, last year we closed out, we had to deal with Evolution Equity Partners Fund 3. Sorry, a little long-winded there. But they're a cyber fund we had, and they've done very well. And the point that you had was there's very few cyber companies that go public because they all get bought up. And that's why cyber funding, like you said, WISE and all that, we did something well, it's working well to acquisition is very quick because it's just such a demand. It's almost like, imagine early pharma when they stopped doing R&D, had to buy R&D. It's almost the same thing now, and the platform companies tend to do better, sell better versus a one-trick pony, because eventually everything adapts in cyber. So they've done well. They'll probably do a fourth fund later this year or next year, but very popular, great performance, because again, it all gets bought out before it even goes public. And these guys always, the public ones have liquidity to have issue shares, whatever they need, and it gets done. So.
Is there one word that you'll leave us with?
That's a tough one.
Not plastic.
Well, I guess coming off from Vegas, we ended it on optimism. And I think it's don't bet against American exceptionalism. And if you think about the Mag 7 and the innovation that comes here, and the expectation for a slowdown or recession, the innovation that comes from the U.S., I think will still continue to lead. And even if we are in the new Cold War, I think especially as U.S.-based investors, we're bullish on the U.S.
That's good. Been hearing that thing. Glad to hear it. Okay, well, we by 361 tradition, we didn't let this table introduce themselves. We want to do that, but we want to thank you for having me.
Thank you.
Perspectives.
Thank you.
Thanks.
Thank you.
So everyone on Zoom, stick around. You had your turn. But let's, thank you. Maybe people who haven't, let's go this way, but Jose, why don't you start? You haven't been around for a while.
Great. Well,
I wish you could take my device and do it. Probably can't. I'll put my
so
device.
the same 3 questions.
Yeah.
Jose Guzman, currently with Guzman Capital, born in New York City and live in New York City. You're next.
Neil, you're up.
Sure. Hi there, Neil Dada, born and raised in New York City, currently living in New York and working at 3+ Ventures.
Hey guys, Eddie Vanderpaart, born in Groningen, the Netherlands, live in the Upper West Side and work with Virtue Capital Partners.
Hey everyone, Brendan Brazier from Vancouver, but live in Los Angeles now and work with Lyra, which is a family fund based out of Vancouver.
Hello everyone, my name is Ramadan Amin with Ubuntu based out of Africa, the continent. I'm from Indianapolis, Indiana, and I live in Manhattan, New York.
Hello everyone, Steve Halikov, shareholder of Polsinelli, born in Odessa, Ukraine, and currently live in Brooklyn, New York.
Another Odessa.
Yep.
What's your role? You are.
I'm a shareholder at
Oh, sure. I thought
Polsinelli.
you said chairperson.
No, not a chairperson. That would be Chase Simmons.
Okay.
Hi, Jonathan Spice, from Golden Arc Family Office, born in New York and live in Rye, New York.
Hi, I'm Sarah Letterman. I'm at 3+ Ventures and out of San Francisco, originally from Southern California via DC and New York.
Hi, Cecile Completo. I work at Stifel with Adam Osterreich, born and raised in New York City. Still live here.
We can't, actually, New York, it's a foul. You have to say where in New York. Where in New York?
I said New York City.
But where in New York City?
Midtown,
Where in Midtown?
Sutton Place.
Okay.
You wanna come visit me? You want my address?
No, someplace good enough.
I used to live in someplace.
Actually, everyone. it depends.
Yeah, right.
And I work at 361. I'm an intern.
First day.
First day. And I was born in India and currently live in Manhattan.
But where in Manhattan?
Like near Columbia University.
Yes, my name is John Watrous, a registered broker dealer. Basically, I raise money and do a lot of different things with family offices and such. Let me see if I got the notes. Oh, yes, I was born in Brooklyn. I live in Garden City, New York. As a matter of fact, I used to be the mayor of Garden City, New York, too.
Is that right?
Yeah. I ran it like a business, though. No politics, no nothing. It just gets stuff done because people.
What years were you the mayor?
2013 through 2016 or something like that.
Oh, wow.
And then when your term is done, you're out, which is good. I think that's what has to happen. But,
Yes. Yes.
yeah. Anyway, I didn't mean to go on and on.
I'm an Old Westbury.
You're in Old Westbury? Oh, okay, wow, cool.
It makes it easy to run as a business if you do it that way, because you don't have re-election
It's true.
politicized.
Yeah.
But, you know, there were a lot of people that, you know, played the politics and all this kind of stuff. I used to sit there and say, no, we're not doing this anymore. I said, you decide you want to admonish me in public, I'll bury you. And then one of the guys who was a trustee with me at the time said, you know, John's nuts, he'll do it, so. And we just got stuff done. And at the end of every meeting, we would go out and we would go to one of the local restaurants, to the bar, and have a drink, and citizens would come up and talk to you and say, hey, what's right, you know? And that was what it was about.
I never saw people
Hey,
drinking.
Kosh,
Garden
how you
City.
doing? Yeah. You've been there, right?
Yeah.
You look familiar though.
I'm Adam Osterreich. I'm here with Stifel. Born and bred in New York, Manhattan, down in Tribeca. And thank you all for coming today. Any questions you have, Mark's got my contact information. Also, I have Nick's information for you too if you need it. And he also told me to remind to add in, which I forgot, is Stifel actually is a very large venture banking team for those talking about it, because we actually acquired about 35 or 40 bankers from Silicon Valley when they had their issues before. So we've been actually very active in that space.
I've heard that. So Silicon Valley Bank is right around the corner. They are our host on Tuesday in San Francisco. And I heard they lost a lot of people, but basically around Bryant Park, HSBC and Stifel.
Yeah, we're also very big and we're like number 3 in venture backed IPOs, so it fits well into our ecosystem, especially small mid cap companies. So.
But I like, I'm from Ohio. I like that Stifel, you're not really a New York firm, right?
Midwest.
You're a Midwest origins.
That fits well with the DNA.
It
of
does.
this community.
We like to root for the.
It's actually 28% employee owned, so it's almost more like a
Oh, wow,
partnership and
that's
public company.
extremely impressive.
And the stock's up. We had some number at the retreat this past week, but it's up like 40-fold since like.
We hit
90 or something.
we hit an all-time high.
Yeah, so it's about 10,000 employees, like 2,400 advisors. We've got like 700 bankers. We have the largest fixed income sales force on Wall Street. We're the most active in the muni market across the capital stack. We cover 2,300 small, mid cap, and large cap companies, mostly small, mid cap. We own KBW, so we have like 600 financial guys in there. We've rolled in everything. We've Miller Buckford on the stress side. We have specialties like Troya Partners on the biotech side. When Stifel likes this company, Troya Partners. When my company, we buy it, and we just closed out Sierra Pacific, which was a fractional electronic fixed income company we bought recently. But not counting that one, 11 of the past 14 major acquisitions, the CEO still works at the company.
I think the Sierra Pacific CEO went to Denison.
Yeah.
That's the other DNA. So any
I have a question.
Yes.
Since you're picked up venture, all the venture guys, how far downstream are you going with venture?
It depends on who the backer is in the tech sometimes. I mean, obviously someone's got like, revenue, that's gonna be a little tougher. But I've brought them everything from, $100 million revenue company to guy doing 10 but a good outlook. So they view it, they do it. We talk about, they bring in the bankers, we all have chats, what the opportunity is, we think it's worthwhile. I brought them one company that was interesting, but it wasn't backed by venture. And they're like, we like it, but the problem is it means nothing. People are so wealthy, they get this not fund it one day and not care. We want to make sure everyone's interests are aligned, and they do a very good job. It's a question of, do you always lend as much as people want? That's always a nice balance out there that goes on. But right now I'm 50% hit rate with them. Stuff I bought them, they wanted to fund. So they do some good work.
How's your balance sheet?
Our balance sheet is actually great because we don't do derivatives or crazy options like that. We don't take that kind of risk on our balance sheet at all. When we do things like for clients, we partner across the street. We're actually some of the best clients for all the bigger firms on Wall Street. We do structured notes. We use 14 different banks, and usually we're the best client. We're the best external client on that from Morgan Stanley, JP Morgan, because again, we don't fund our balance sheet that way. So we can do it with everyone else. We customize that on $250,000, and all the mortgages are done for our own clients now. We don't do mortgages for non-clients. We know exactly who we're lending to and why and how. And we never took TARP money in 08 out of that. We didn't need to. So it's a very solid, going back to slightly Midwestern style, don't risk the farm, nothing worth that. And I brought them deals and they say, if you think it's not right for the client, they'll say no, because it's the right thing for the client comes first.
Let's shift back to the themes. Anyone want to weigh in? We usually say what scares and excites you and go, but not around the room, but just anything that you heard about today that you want to comment on or ask a question about or want to say what scares and excites you on these themes? Anyone?
I'll throw in, I can't believe people are buying GameStop again.
Did they buy it for a couple days or is it?
And some people bought it and held on and got lucky again, but it's sort of like you're spinning a roulette wheel. And it's like we've had this conversation many times before. And I saw some posts and one of the guys like, we're gonna get the Wall Street guys and squeeze their shorts. And I'm like, everyone makes money. I'm like, no, they don't. No one talks about the losers. I mean, except for the gentleman who highlighted it, of 158. But very rarely people say what goes wrong. And also when things like GameStop run up and like MicroStrategies, it messes with the valuation of the small cap market again. So you have to know what's in the hood, whether ETFs or investments. But I think hopefully that dies down again.
I see it as noise. So I'm not so.
Who's selling GameStop? It's GameStop.
That's true. It Hertz funded itself again through this last, 2020. That's how they remain insolvent. They sold $0.09.
They're getting sued too, right, GameStop? Because all the people that are
abusive, and, yeah, all that type of deal, so. And it's their fault, you know. these people doing this.
What else?
Um,
Yeah, Mark Ramadan.
so I'm generally speaking, I try to stay on theme, so I'm gonna talk a little about, Africa and then a problem that sort of bothers me in general, which is, I mean, I never thought about it, but I always thought that there was a relationship between GDP and population growth. And there isn't. And when I began looking at why it's not, then the question pops up, then why isn't, when people talk about Africa, they talk about the fact that there's going to be that many people in Africa in the year 2030, and where it's like 1 in 6 or 1 in 5 will be African. And if in fact there's not significant infrastructure or significant expansion strategies for businesses across the United States going in, then what you have is just like a massive national security risk in an area where we have massive population growth and a critical amount of natural resources that we need access to. And if these things are true, and if in fact, to use the words, American exceptionalism is so exceptional, then it follows suit in my mind that there should be a strategy that involves, in every business portfolio, Africa. And so the question remains, why why aren't you, or why aren't people, or why aren't startups that are already effectively risky, developing a strategy around effectively shoring up their own portfolio as a startup by investing in a lookalike in Africa? Why aren't people looking at the place where there's lots of risk, where small dollars do a lot, and American exceptionalism trumps every other type of exceptionalism in the world? So like, let's get over there, right? That's it. I just don't understand why that's not the case.
My first job was on the subcommittee on African affairs and economic development for the government.
So you have the same question, right?
So, well, we invest in Africa now. Kevin and I started the firm actually co-investing, angel investing in Africa, and he's been at Lofty for 3 funds. And so there's a couple things. We didn't take the right approach. And now what you're seeing, like we've invested in a bunch of African companies, two unicorns, Andela and Flutterwave. But like we just did an investment a couple years ago into Wello, which is health-based. But the problem is that there's just a misalignment in how we approach investing there, and not to give China benefit, but China went in and said, we'll build you roads and we'll build you infrastructure and we'll bring you power. In exchange, we're gonna get the things out that we need. So they built the roads to get the minerals out for themselves, but you know, they built schools and they did all these things, and they did it by investing capital. And instead we were deciding, you know, like which militia we were gonna fund to protect the Chevron platforms. And so like the US has always come at it from a militaristic perspective rather than an economic development perspective. And I've not, in the 20 years that I've been at this, been able to shift or get this country, like people even who are investing, to shift that mindset for infrastructure development. And it's just the rest of the world looks at it very differently than US investors, and I don't have a better answer for it, but I see exactly what you see. And we've been in it.
That's really interesting. If anybody knows the book 1354, I think. So 700 years ago, China's approach to exploring the world was not imperialistic like Europe's. It was for creating trade. They were looking to find countries, to trade with. And what you just said in terms of how they're dealing with Africa is the same mindset in a sense. They're looking to go in and trade, not militaristic.
I would not agree with that. I think Xi's is a different mindset than that era.
Well, no.
It's a Trojan horse war, like China's more like a Trojan horse. Like, why fight them when you can partner with them and get what you want and get more control? I mean, the belt and suspenders is more like been vulture capital on a global scale. I mean,
yeah, they build a
China
lot of
said that,
trade
but,
deficits, right? So that you're you're an indentured servant, right? Because they built you all this infrastructure that ultimately benefits them, but they've done it without expending the resources in the same way that the US has exhausted a lot of human capital And, you know, I mean, military capital on things that they could have just put a few dollars into. Like, we did a survey, this is like my favorite survey we ever did, because it made no sense to anyone. And we said, what makes, like, we were trading infrastructure, so we're like, what makes a good school, right? What makes a good school? And we had like 20 things on the list, nobody picked any of them. And we're like, what did we do wrong here? So we went and we said, what makes a good school? And we just asked, and they're like, oh, the teacher shows up. Like, the mindset is so different. Like, we were thinking, like, what can we bring in, a resource? No, they just want a teacher who's gonna show up. And like, so fundamentally, like, their infrastructure, their politics are, you know, broken. They're still run in sort of tribal fashion. And it's just not something that our investors have the experience or the mindset to manage properly. But the Chinese just figured out, like, throw money at the problem, create the big trade deficit, they'll keep selling you stuff and you just keep giving them what they need slowly, right? And that's a system that works.
So Ramadan, what's the point? And the era that, sorry, go ahead,
I would like to know.
Yeah, I was going to
Ramadan.
say, my children live in South Africa. I've been doing there for the last 15 years. I've worked with and Flutter Wave on their Series A round. I've spent a lot of time there. We've invested a lot with our family office over there into a lot of South African companies, and they've migrated north. You know, a couple of the problems, and I think what's been pointed out well is China plays a long game here. They've indebted the continent. They've gotten what they want out of it. U.S. has really come from a militaristic standpoint. Most recently, there was a huge problem with the U.S. government in South Africa, accusing them of loading arms onto a Russian ship. And, you know, it just put the U.S. into a very bad light. So what's happened is South Africa and the other countries around there have really, surrounded themselves with the BRIC countries and have taken that side. And they look at the U.S. and they play the imperialistic game. And you have to remember with South Africa, who's a leader there, that they're led by the ANC. It is going to be an interesting election in 2 weeks. For the first time, they're going to be a minority. But for the current, present time, they are the majority rulers there. And it was the Soviets that funded them during apartheid. And so there are deep, long ties that go back to that. And the U.S. is trying to overcome that. And so, we can try to outspend them. The Chinese, going outside of South Africa, the Chinese have outspent us on the rest of the continent. But what is happening there is a lot of xenophobia now coming in with the Chinese, realistically. People are worried about their children learning Mandarin in schools and things like that. The cable providers in Eastern Africa are Chinese cable providers, are some of the largest in pushing, the Chinese messages there. And so it's a very complex situation, but the U.S. is definitely losing with what's gone on. As far as funding goes and startups, I think you have to look at, with the big companies, and this goes up with startups, is repatriation of funds. Nigeria has always been the next big thing. And I call Nigeria the Waterloo for large corporates. You look at MTN, you look at MultiChoice, a large cable provider out of South Africa, Woolworths, ShopRite. Time and time again, it's the Nigerian government, once they see money being made, something comes in. And they get fined for billions of dollars. And so it just puts a halt to the growth of where it goes in. And they shoot themselves in the foot. It'll be interesting to see the new president in Nigeria with the reforms that are going on right now. But we still have to see how that works. It's a complex situation. I know I've brought up a lot of different points here, but the complexity is, I think these countries shoot themselves in the foot. I like to say Africa consumes itself with corruption. And I think getting around that, there are incredible business models that are there. But it is the governments that often hurt themselves the most. And that is why you're going to see in South Africa in this election, the ANC, for the first time, when Mandela was there, it was plus 70%. And for the first time, you're going to see them below 50% in 2 weeks in this upcoming election. And, the question there is, be careful what you wish for, because they're going to have to form a coalition government. And they're looking at forming, and one of the people in play is the EFF, which is a guy named Julius Malema. And he was kicked out of the ANC for when he was the head of the ANC Youth League for saying, kill the Boer, kill the white man. They had to kick him out. And he is a protege of Robert Mugabe from Zimbabwe. And we know what happened to Zimbabwe. So interesting times ahead. There is a huge opportunity. There's huge growth, but there's just a lot of issues surrounding the governments and repatriation and other aspects. Even technology transfer out of South Africa in these countries has been difficult. That's why everybody, puts themselves in Mauritius and, and other points away from, the mainland.
So, Rob,
Sorry.
I feel like you have point counterpoint maybe. I don't know.
Hi, Alan. Thanks. I'm learning how to be sort of like more yes and, so I'm going to be yes and.
That's how. By the way, Clinton never said no to Yeltsin.
Yeah.
It was always a yes and.
Right. So I think that well, let's just talk about ESCOM for like 15 seconds. ESCOM, some argue that ESCOM mismanaged their own resources, but the ANC, which stands for, was it African National Congress or Democratic Congress? Or
African National Congress.
Like that. Yeah, thank you. They and their teams ran a large portion of the billing for ESCOM. And so ESCOM allocated bill collection of resources to ANC. ANC collected the capital and never gave it to ESCOM. ESCOM never had the capital to reinvest in their CapEx. Therefore, they had massive deterioration of their infrastructure. Yet, when people talk about ESCOM, they talk about mismanagement of a business and the governance perspective. And it's not necessarily ESCOM's fault because ANC also runs the government. So you need to play nice. That is just one country out of 54 countries. And it's one specific case, which is effectively the energy case. And the impact of that just in South Africa is that you have the most technologically and sophisticated audience in the world that understands power consumption at the retail level. Everybody talks power, how much you're paying for kilowatts, how much you're paying to heat your water, cook food. They can tell you in kilowatt hours what they pay for their dinner. Like that level of sophistication.
They're getting power shut off 6 hours a day, as of 6 months ago, 6 to 8 hours a day.
So these there from a I'm going to use the same word again because I just like it. From a American exceptionalism perspective, there are what I always say, which is intelligence is evenly distributed, and capital is not, and problems are also not equally distributed. So when you have problems of power in countries where people want to survive and live and understand what they could have, they come up with means to get those things done. So for every single risk or challenge that sits across the 54 countries of which we just talked about, one in one sector, there are solutions that exist in country. How do you get access to that information? I think that a clear way forward is to begin caring about the continent. And the only way you can care, I believe, is to allocate risk now. And if you're not allocating risk now, then somebody else is, and you will be playing catch up. And in 5 years, from 2008 to 2013, China changed materially. And if you tried to get in 2013, you're too late. But this is 2008 for Africa, and they are going to figure it out. And China will get there and beat you if you don't do something about it. So how do you allocate risk? That's your decision. But I would ask you to think about what is a way to do that. Personally, I think a very cheap way to do that is to understand what are we good at, what do we do, what do we like, and who from an HBCU, a black school, or a black person that wants to go, air quotes, back to Africa, probably costs you about $120,000 to $200,000 a year. Set them up with an office, give them an interest in the business, and say, "Go! You've got all the resources. Figure out how to build a business and generate revenue. You got 2 years." Like that. That's risk. It's cost effective. It's relatively cheap, and give them a few other students that went to Howard or Notre Dame who wants to go back for a year for a vacation. That's one way. Two, in your portfolio, if you have a portfolio company that has, 2 years to profitability, find a lookalike. Find a lookalike in any country that you want, and have them put money on their balance sheet into that country. You'll get access to cheaper capital or cheaper staff. You'll get access and you'll have relevance in the country, and you'll begin to at least allocate some level of exposure. Oftentimes, I've found between $250,000 to $500,000 will get you 15 to 20% ownership in a business that has a runway to profitability of 18 months, which means that your portfolio company could have on its balance sheet a revenue generating asset inside this business. So you're basically de-risking your VC portfolio by investing or having them invest in lookalikes. 3 more points and I'm done. 2 and 3. I think oftentimes the challenge of repatriation of capital is not the question we should be asking. And I'm speaking from like conversations with ministers of finance or ministers of housing and urban development or chambers of commerce or CEOs of stock exchanges across multiple countries across Africa. And the statement's always the same. If you take a minority position and you reinvest capital in the business, then what you're doing is building real value, right? So fine, you want to be the number one, the CEO? Be the number one, be the CEO. Hire number 2. Make sure your number 2 is local. Garner investment, raise additional capital, be comfortable with the reduced position of 20% ownership in the business, and repatriation of capital will no longer be an issue. And ultimately, balance sheets really, from a CFO's perspective, which is what I was before, it's really about actually having access to capital and the capital required budget perspective. And if you begin to let your shareholder, if you're private or public, understand that it's a longer play across Africa, I think it's reasonable for them to accept or price in the fact that you are having a longer term strategy or position across the continent than previously accepted. Last point. There is a man I spoke with who in 2016 went to Africa. I'll spare you the continent, and they were the country, and they met with the president's brother, and they had a deal on the table where the president's brother was going to bring 50% of the equity in cash, whatever the number was that was required. And when they did their research, they saw that the person wasn't the president's brother, and so they walked out of the deal. And so I explained to him, like, look, I know who you're talking about, and it is not his brother, but that's the person that has the decision-making capability that represents the interests of the president. And what you walked away was from a $1 billion deal. And he said, can you get it back to the table for me? I'm like, well, I can meet with them next time I go, and I can see if they're interested, but I don't know. But the idea is making the cultural shift necessary to understand and recognize, like, how do you get a deal done? Like, what is an acceptable understanding of how to do it? What are timelines? Does rule of law mean anything? How does recourse work? Where does reputation fit and exist and sit in the system to do what you're trying to do? What is greedy? If you are greedy, who will come in to cut you off at the knees? All these things are questions that have answers, real answers. I have some of them, but I think that generally speaking, pay tuition, allocate risk. Allocate risk with me, allocate risk with anybody, but begin allocating risk. And that starts with sending somebody there, which costs you $150,000 for head count. Like, that's it.
Actually, one segue, but totally what you talked about.
Yeah.
If you guys ever know Rocket Internet, those guys did the same model, but on like on a global scale, especially in Europe. Like, a company copied it, make it local, build it up, sell it to the original company you copied, and they did it. They made billions doing this. So the model is well-founded, well-funded, and all that. So
Alan brought up the one word that scares me the most, which I don't know, no one's brought it up, as BRICS. Countries are joining BRICS, and BRICS's agenda is very counter to, I don't want to say American imperialism, but America's agenda. And I think that there's going to be a big problem between the West and BRICS nations. And I think that when we talk about this sort of new Cold War, I think a lot of it's going to be economic. And I think BRICS is going to lead the charge. I mean, Iran's joined, Egypt's joined, Ethiopia, a lot of African countries are talking about joining because they're looking for a different way to manage economic risk and not be tied to the dollar. And I think that that's going to be a huge problem over the next 10 years.
I agree partially.
I wanted to ask you.
Yeah, but I agree partially. But the one thing I look at it, I take it objectively, is preservation of capital, rule of law. You're letting Russia and China run your currency, which I would kind of imagine be a good idea. And then they're throwing Iran in the mix, and they want to throw in Argentina. it reminds me of, remember, 08 with the third tranche of the CDOs. Can't go wrong, all this great money, it's totally safe, and then, too many negatives to not make a positive. And so that's my concern about the BRICS is, does India really want to be tied to them or more to us? Because they're the biggest population, biggest democracy. And the demographics, which is huge for China, huge for Africa, is horrendous for China. China has a massive problem. Depending on who you talk to, they can go from 1.4 billion to 2,100 down to like 600 to 900 million. And you're talking about collapse. And so the question is, what do they do? So you're tying your business to at their peak, and they're heading down. Demographically and age-wise and workforce-wise and all that. So I understand why people want us. Another choice besides a dollar. But having those two lead the charge would be my best bet in terms of stability. And usually they get it and then sell and move back to dollars half the time anyway now.
Yeah, dollars is still the dominant player in every country. So in that sense, it doesn't take much for the United States to come in and people to start turning their head towards a different direction. But there's no counterweight right now. There's no opposition. So it's as scary as BRICS is. No one's talking about BRICS. They're just saying why isn't the United States coming in? Why isn't there more U.S. investment? Why doesn't anyone get exposure to these continents? We are definitely interested in having conversations, but the only one calling us is somebody that represents BRICS. So it's wide open. We've got plenty of time and opportunity. I think BRICS is part of the irrational fear, but ultimately we all exist to have economic balance. And if BRICS provides that economic balance or access to a capital market, people will take it because they got to finance development.
Well, the question is, I think there's going to be a question of what is going to be that monumental event. In the 1960s, Yuri Gagarin was the first person to enter space. The Soviets sent the first man into space. They had the Sputnik program. And basically the idea was JFK could not leave unanswered the idea that there were satellites floating above Montana, right, taking pictures of airfields. This same concept is going to happen where there will be a monumental moment that's going to change the core of U.S. foreign and defense policy. We're starting to see that pivot on the economic side and moving towards that defense stance, right? From everything from manufacturing to research and development. One of our companies today just said, look, we cannot tolerate an idea where Russians can jam GPS systems, right? Or systems related to GPS, everything from missile defense to planes. So the idea was now they launched the first quantum GPS to let everybody use it. But the idea is now we are going to have that moment where BRICS is going to take some kind of dramatic move. What that dramatic move is extremely concerning, but that is going to push the U.S. and allies into a different stance, I think.
I was just going to say, with all of the negative things I said before, we are raising a fund right now for Africa. I think the prior gentleman, I had a call. I think it's early. It's still early, and I've been saying it's early for 15 years since I've been going there. Yeah. But the opportunity is there. I had a wonderful call with a woman who is on the board of ESCOM and the board of the PIC in South Africa, the Public Investment Corporation. They manage 150 billion. And the question I had to her is, how can we drive innovation from the Silicon Valley into Africa? And that really excites them. And that's what I want to do, is work with business leaders. My children live there. So my children are there for the next, 10 years. And so how can I make their lives better and the people around them better and the continent better? And that's really my focus and my view. And so, looking at that, I think that there's a great opportunity to create that bridge, and it's creating that innovation bridge between Silicon Valley and making people's lives better over there. And at the same time, you look at payments and things like that with M-Pesa, the world has tried to emulate that in many ways. And many payment platforms and other types of technologies have started in Africa and have, permeated to the rest of the world. So there's a lot we can learn too. But anyway, there is a lot of opportunity. It's just tiptoeing around the minefield and understanding really the political shifts that are going on within the continent. So
okay.
Thanks.
Well, we talked about Africa 2 weeks ago, was it 3 weeks ago? And your colleague Mamadou is coming over.
Yep.
And
My
on
boss.
Monday, we will be at Inc. 48 Hotel, which is 1 block from Salt, those who are going to Salt. So, and our friends from Ramadan and his colleague will be there, Bill Marcus, so we'll carry on this discussion there. I think Mamadou's also gonna join us in West Coast, or you or Mamadou.
Yep.
So we'll keep those conversations going. We have our first Africa fund, Launch Africa, which we are marketing, and that we're getting some traction there. We'd like to have an Africa team. We're doing an Africa tour. We're gonna talk about that, I guess, over the next several days. So we did an advanced tour in Ohio. Eddie was part of that. We'll do the equivalent for Africa. And then we'll learn together, figure out how to play it.
Mark, if I may.
Yeah, Giovanni, go ahead.
There is an interesting documentary out called Dirty Coin, if you want to look it up. And it's about Bitcoin mining and how dirty it is and so on and so forth. And the documentarian, Alana something, has done a mini doc within it about how Bitcoin mining is helping electrify Africa. These villagers want electricity. There is electrical capacity, but they can't get the wires out to these villages because they can't prove demand. And so they're partnering with Bitcoin mines that set up these temporary Bitcoin mines for a couple of years, which is about the cycle of a halving. That proves that there is demand in the village. Then the electrical utility company builds out these lines, and once the village is electrified, they then leave the village and then move on to the next village. So there's a great sort of crossover between helping Africa, generating phenomenal returns for investors. I'm unfortunately only allowed to make allocations for the family office. I don't do the philanthropy or charity or whatever, but that's a great way to sort of cross over, generate returns, make the world a better place, and so on and so forth. So if you guys want to look it up, it's Dirty Coin, and the woman's Alana Medjavidia or something like that. And it's an incredible documentary and gives some great insights about how we can make immediate, measurable differences to both investors and the people in Africa. So just an idea.
Thanks, Giovanni.
So I'm going to push back on that and say that's great. I think oftentimes what we tend to do
is this your yes and?
Yeah, we just tend to do one thing. Like if there are 20% returns we can actually pull, we should consider looking at 15 instead of the 20, because the additional 5% could be put into either a fund that you manage, stays in country and does more infrastructure development. There's entire ecosystem and way more money that can be made in that system where when you lay down power and you lay down some level of governance or some access to additional information on how to run businesses, you can basically take a 5 to 10% stake in the entire economy that develops, which is a far more profitable thing, but it requires a longer term and strategic approach to that. So my yes and is like, that's perfect, but thinking about staying and landing and expanding is also a more lasting way to combat bricks and also to multiply the revenues.
I'm not, I'm in no way implying that you should leave. Yeah. I'm just saying that the juice is worth the squeeze. I mean, I'm doing investments in Bitcoin mining where the infrastructure costs are repaid within 1 year. So over the space of the loan of 5 years, there is enough juice there to share with everybody and de-risk the infrastructure project financing within 1 year, but the loan term is actually 5 years. So there's
Giovanni,
plenty.
Giovanni,
Go
is
ahead.
that something that does Chris, your colleague Chris, is he dealing with Africa as part of this strategy you're investing in?
Chris does whatever the syndicate members ask him to do. He advises on projects, but so far there are no syndicate members who say, "Go do this in Africa." He could, but he's not a manager. He's an advisor. So he puts together projects.
I mentioned that
Yeah.
maybe since you're in Cannes Film Festival, you're not coming to New York, but Chris
Oh,
will be here.
No, I leave Saturday.
All right, well, maybe you will be with us. I was just thinking he could meet with Ramadan and Mamadou and I think you need both. We're talking about how do you invest in different places. But if you can make some wins are good. And stories about wins. Anything else we want to, yes, sir?
Odd fact, current Bitcoin mining with the energy usage is about the equivalent of the output in South Africa right now. And it's climbing. And the other issue is for power supply, especially with data centers, it's already almost doubled. I think by 2030, it's gonna be 6% of the US power supply goes to data centers. So there's a lot of power constraint, both the cities and that. So even with Bitcoin mining, depending on the price, affects it a bit too, but data centers actually is the biggest now, lead generator for the utilities and things like that. They're actually talking about putting data centers in new utility plants because it cuts down on.
So does anybody know Kevin McGovern?
Yeah.
He was the one that Jack was really happy to meet because Jack was younger. And he's one of your clients, right? At Postnell. He was talking to 20% of the US, a lot of our power consumption goes to refrigeration, and he's got a power. So I know some things are going up, data centers and power usage. He's got a way to reduce that by 30%. So on a net basis, he makes up for data centers, you would say.
Yeah, it's neat tech.
That goes to that American exceptionalism. We keep.
If
we could just get both sides of the puzzle figured out, we are definitely finding innovation. So we'll talk later?
Yeah, I'll give you a call this afternoon.
All right, it's like it's not Zoetic, that's because Zoetis is the pet med company, but it's like Zoetic, and it's refrigerants, 30% reduction in pollutions and all that too. So it's actually good for the environment, but actually cheaper and better for everyone to use it. The guys are doing very well, not raising any funds right now, but they're doing some impressive stuff. So innovation we tend to lead in innovation here. Yeah.
I'd be very interested in that. Giovanni Vinci, she's very interested.
Anyone who's not said a word yet, want to say a few words? Don't have to. It is 2:00.
News.
So we'll say thank you, everyone. Miriana, you saw on your colors of your branding, I like the earthy, calm. You may want to show on the screen. Everybody can make a choice.
It's on my phone, so.
That's a good idea.
But yeah, I just wanted to announce that we will be hosting the next London gathering, probably 11th of June, in case anyone is in London. So yeah, that would be great. Potentially at Floodgate law firm. So yeah, in terms of coloring, so device that I've been developing, it's all related to longevity, and I like the theme that was running from the beginning of this call as well. It's all about preventative health and how you can reset in 20 minutes. But now we are building the app, which is driving product. So I just wanted to kind of quickly show you if anyone can see. Maybe no, it's actually very difficult. Mark, maybe you can show it from your phone.
Screenshot up your screen.
Yeah, no, I think I can actually. Give me 1 second.
I think Mark can show it actually. So I'm just gathering consensus about which colors we should start building on. And it's all about helping people to sleep, breathe, and reset in 20 minutes when you don't have time to do that because of busy life. Yeah, there you go. Perfect.
I can't, it
And
should
this
blow it
is
up
dark
there.
blue. The middle one is dark blue, by the way. It's not black. So lots of people were assuming it's black, but it's actually dark blue.
I think it's very male. I gravitate towards it. I don't know if women will. I just think the last one, the bottom one is.
Bottom right, the blue.
Bottom one.
Bottom left.
Right.
Yeah, that was, it's interesting. I asked more than 100 people actually from all different walks of lives. And the middle one, the dark one came as number one, and the bottom one, bottom left, came as number two. Or if you can do dark screen and light screen, that would be another good option so people can choose. Thank you, Mark, for showing that.
All right. So let us know so we can let people know about June 11th.
Yeah, will do. So just organizing now the confirmation from Floodgate Law Firm.
Well, we're all focused on San Francisco and Palo Alto, Berkeley, Palo Alto, and then Stanford.